4th of August. Friday, 4th of August, so that means non-farm payroll day. First Friday of the month. Strap yourselves in, people, for some important economic data. This is coming at 1:30. That's PM. This is key Tier 1 US news flow. So I'll talk about this during this briefing. Before we get on to that, let's just kind of recap very quickly on the events of yesterday and look at what's happened overnight, what's grabbing the headlines this morning, how our market's behaving. We'll talk about Trump in a second, but firstly, obviously the big mover of yesterday was this big step to the downside that we got on sterling. And this is just a look at sterling versus the dollar, but of course sterling devalued against everything yesterday. Let me go to a daily chart just to get this in perspective. We traded down to the low at 131.30, and as you can see, it's not too dramatic when you look at it on this picture. In that, all that happened really is we gave back the gains we had on Monday. So we didn't even make a new low for the week yesterday. The downside driven by the Bank of England, firstly, and perhaps not unsurprisingly, the vote count was 6-2. That means of the 8 voting members on the Monetary Policy Committee at the Bank of England, 6 voted to keep rates unchanged at 0.25% and 2 voted to hike. So the important thing there was we saw a change from the 5-3 split that we had the month before. So that's a dovish shift. This was expected though. However, it didn't stop sterling driving quite sharply lower. If we go back to that 30-minute chart, you'll see the first step lower was at midday when we got that information. At the same time, we got news that the Bank of England were downgrading their GDP forecasts for 2017, 2018 and 2019. So for 2017, they think growth in the UK will be 1.7% now. Previously, they had thought 1.9%. They reduced their employment forecast, but they actually edged up their inflation forecast for this year. And so that was a slightly hawkish element to it all, but ultimately, of course, the dovishness won the day here. And as we got to the Mark Carney press conference, there's certainly focus from Carney on Brexit. I think definitely quite a significant step back from the hawkish comments he made in June, where he essentially said, look, it's time to start hiking rates. That's what he said in June. Literally like 6 weeks later, he's then saying stuff like, the UK was still experiencing exceptional circumstances and would do so for some time, obviously relating to the Brexit-related risks ahead of us. And overall, I think markets have gone from really worrying that the Bank of England might have to hike rates this year to actually saying, you know what, they're not going to hike rates until second half of next year. Is this sterling weakness here that we saw literally just for 2 hours yesterday, and then it's been sideways, and as you can see, we've just ticked up and made a new high for the day as I speak. So we're trying to regain some of these losses. But go back to that daily chart. I actually think that the pound should not be up here. I don't think above, to be honest, I don't think above 130 is necessarily justifiable. Never mind above 131 or even 132. I think that event yesterday, yes, we're getting a bit of upside right now, and actually we're just testing the high we had back on the 27th of July, which was last week's high, 131.81. I think actually this should set in motion, in my opinion, a reversal now over the, let's say, next week. I reckon we'll see a pullback to 130 as people really just reset their Bank of England expectations properly and push those rate hike fears out into the second half of 2018. So that was certainly a key event yesterday. The other one was US data, where we got some worse than expected numbers on the ISM non-manufacturing. We'll talk about that again in a bit when I just talk about payrolls, which is going to be this afternoon, because these ISM figures have employment components, and so these can be, a decent guide to perhaps what we might expect from the non-farm payrolls figure when it's announced at 1:30. Let's talk about the kind of big headlines all over the press. I mean, you could not have missed this. If you didn't see these headlines, if you're not aware of this story I'm about to tell you, then you are definitely not doing your prep work. You're definitely not reading the news, and that is not good. You need to be on top of what is happening out there, certainly on these major issues. So Mueller is said to use Washington grand jury in Russian probe. This is the big headline. This came out and the news hit. Let me just get the timings. It was about 8:30 last night. If we just go back to my charts and we can pick out some of the moves. And then the more important thing, explain what's happened since. So look at the S&P here. You can't really see it, but where my mouse is, 8:30, spiked lower, new low for the day. It's been quite a choppy day, but then new low. The S&P had managed to kind of avoid selling off at 3 o'clock. We had the bad ISM non-manufacturing data, and we didn't make new lows off that. The morning low stayed intact. If I just draw a line there, that was at 2467.75. That was the morning's low. Bad data at 3. We had a bit of weakness off the cash open. Bad data at 3 o'clock. The S&P did not make a new low. Again, tested it at 6:30. And it looked like we were just drifting into an uneventful close, and then this headline started, spreading like wildfire, and the S&P spiked down, and we did make a new low for the session. And if I go to a 60-minute chart, then this low, I mean, we did, the lows from the day before didn't get reached, so it wasn't a particularly dramatic sell-off. And the more important thing is, right now, as I speak, this very moment, we are trading at exactly the same price point we were trading before these headlines hit. So the S&P doesn't care. That's the point. Let's have a look at the dollar, and let's have a look at the euro against the dollar here, and have a look at last night. And at 8:30, if I'm going to go to a 5-minute chart and really zoom in on this, we had this pop. Here it was at 8:30, which took us up to really just almost get to the high of the day, but not quite. So again, a little bit of dollar weakness, and then things just kind of shifted sideways. Where we're trading now for the euro dollar, for example, is also roughly, well, actually no, I guess the euro dollar is above where we were before this headline was announced. But look, we've got a strong upward trend in this market anyway, so this news flow is just supportive of that trend more than anything. But what is this news then? So this is about, obviously, the investigation into Trump and Trump's team, and their, was there any collusion with the Russians? Did the Russians in any way alter or try to alter the outcome of the US election? Was Trump's team in collusion with Russia in trying to do this? And I'd guess probably more importantly in the grand scheme of things, was Trump himself aware of what was happening here? Was he, involved? Right now, obviously this investigation's going on. What happened last night is that just Mueller, who's heading up this investigation, well, as you can see, I'll go back to the headline on Bloomberg, is said to use Washington grand jury. Massive sensationalist headline, of course, and the press, this is classic media. This actually isn't that big a deal, and actually was probably expected. What you may not know is Mueller was using a grand jury anyway. It's just it was in Virginia, and he's decided to convene a new, fresh grand jury in Washington, really just for convenience more than anything, because he is in Washington. What are grand juries? Well, so this is where you get members of the public. You choose members of the public who come in and they hear evidence, and this is all in secret. They hear evidence behind closed doors. So effectively, prosecutors use grand juries to gather evidence. They subpoena people of interest, and the point is that they get them in front of a grand jury. They have to swear an oath, and they have to tell the truth, and nothing but the truth. And so this is a way of gathering evidence from people of interest and making them effectively tell the truth. And if they don't tell the truth, of course, that is perjury, that is an illegal act. So it's an evidence gathering process. Then, of course, the prosecutor Mueller's got to decide if the evidence gathered is strong enough to actually issue indictments for criminal trial. Just because there's a grand jury being convened here does not mean there is guilt and that there is going to be a criminal trial. The grand jury themselves do not decide on innocence or guilt. It's simply for the gathering of evidence. Be aware that these grand juries can be convened for as long as 18 months. That's the maximum period of time. So this could be a convening of a grand jury for Mueller to use over the next 18 months as he gathers evidence. And what we know is Mueller's investigating this meeting that Donald Jr. and Kushner had with the Russian lawyer. This is before the election win, of course, and this is where the lawyer was essentially offering them damaging material on Clinton, and it appears Don Jr. got pretty excited about this. At the moment, the line from the White House is that Trump had no knowledge of this meeting whatsoever before it happened, and he had no knowledge of this meeting after it happened either, which, I don't know, surely has to be a lie. But anyway, this is the whole point. Mueller's trying to find out. So this is completely expected, very normal development. It doesn't mean Mueller's got his man, and I don't think this means we're going to, suddenly expect to get a result from this investigation anytime soon. Okay, so I think the market reaction yesterday was really a function of, not that it was a large reaction and not that it's been sustained, but it was really just a function of the media sensationalizing it, and it's all over the press this morning. But I don't think it's a bit of a storm in a teacup. So let's get back to more important things. What are these things? Well, let's have a look, and let's check out the data calendar for today first. So no data of note this morning. We've got some data out of Italy at 9. This is retail sales. This is not important. We had the Eurozone as a whole retail sales earlier in the week. This Italian number is irrelevant. So that does mean we've got nothing this morning. I mean, there's no scheduled news flow of any note. Okay, so you've got to make sure you're aware of that. Get your mindset right. Don't try and force things this morning in terms of trying to get trades on, trying to, have unrealistic expectations of profit potential. Keep it tight, patient. And then this afternoon we've got key data, of course, at 1:30, which in itself is a very difficult event to trade. But it's after 1:30, and let's say through right till the European close, that you might get some decent action following the 1:30 news flow. But of course, trading non-farm payrolls, those of you who have done it will be very conscious of the fact that it is a very difficult, incredibly market volatile event that's hard to manage risk on. But look, what are the numbers? Well, expectations for non-farm payrolls for July. This is the number of jobs created in the month of July. We're expecting a market consensus of 183,000. That compares to 222,000 from last month, though. So the month of June. Let's have a look at the chart. So the month of June's reading was nice and solid and needed, because we'd had a few bad readings. March's number in particular down at 50. The May reading was at 152, and so it was quite timely that we got a nice solid print above 200,000. Okay, which has kind of put this back on, track in terms of, what we often look at as the average, the 3-month average of non-farm payrolls. Obviously, it's a volatile release, you can see on this chart. So to smooth that out a bit, we look at the 3-month average, and this 222 print came in and replaced the March 50 print, which obviously net had a very positive effect on the 3-month average. And so, before this 222 reading for June, before that, people were really worrying that maybe job creation momentum is slowing, And maybe this is going to be an issue for the Fed. And maybe the Fed aren't going to be able to hike and so on. But 222 came in and like everyone breathed a sigh of relief. It's okay. Job market's solid. The Fed can carry on. That was the kind of thought. So what we're expecting today is 185 or 183. And that'll be fine. You know, if anything between 150 and 200 is absolutely fine. To be quite honest, I think the Fed... I don't think the Fed care too much about non-farm payrolls at this point. The reason I say that is because we'll check out the unemployment rate. It's down at 4.4%. That did tick higher last month, unexpectedly. We're actually expecting, let me just check on the data calendar. We're expecting the unemployment rate to drop back to 4.3. Anything below 4.3 would be a new 10-year low. But look, these rates down here, mid-4s, this is, you know, as good as you can get. If you look back to before the crisis, you know, this is where the unemployment rate was. This is on some measures, not all of them, on some measures full employment. And so the Fed, I don't think, are too concerned about this job creation situation. Even if you get a weak number today for the month of July, we know that Amazon, we've heard from Amazon off their earnings report that they've actually got some pretty punchy recruitment plans for August. So we know that the August payroll numbers will be massaged higher by Amazon. And so that might just, you know, take the concern out of any dip that we might get today. Let's say the number comes in below 150. Let's say it comes in at 100. Well, sure, you're going to get some short-term volatility on markets, but you know, I wouldn't expect that to last. I don't think too many people have non-farm payrolls at the top of their list of important things to be worrying about. Job creation's generally speaking pretty solid, and the unemployment rate is healthy. The other stuff we get, well, actually, just before I talk about average hourly earnings, so what might we expect? Because we've already had employment data this week. We had the ADP employment report. This is the chart for that. This is only private sector job creation. The non-farm payrolls figure measures both private sector and public sector. This private sector reading came in nice and solid. It was slightly below expectation, but I think, what was it, 185 expectation comes in at 178, basically in line. And this is fine. You know, this is not unbelievably phenomenally good, and it's not, oh my God, disaster. It's just about right. It's just about in the middle. The point being, it's not going to lead to the Fed accelerating their rate hiking cycle, and it's not going to lead to the Fed decelerating it. These kind of numbers, 150 to 200, solid, everything carries on as planned. Okay, so not too much information here from the ADP. The ISM readings, both the manufacturing and non-manufacturing, both employment components came in weaker than expected and dropped from the previous month. So you got a little bit of a negative tilt to the July employment conditions when you're looking at the ISM readings. However, having said all of that, it's notoriously difficult to predict non-farm payrolls. So we're going to see. Anything above 232 would be the best reading of the year. You're going to have to go below 50 to get the worst reading. If it is below 50, well, sure, that would be a huge surprise. Fine, you may well get some, you know, sustained market reaction. But I'd say perhaps the more interesting reading is actually this one, which is the average hourly earnings. We're expecting plus 0.3% for month of July. This is wage growth. This is more important when you're thinking about inflation, and that's what the Fed are thinking about. So we're expecting 0.3, which would be a nice positive result. We haven't had a 0.3 print since February. We've had 0.1 and 0.2, 0.1 and 0.2. Last month this was disappointing. We were expecting 0.3 last month and it came in at 0.2. They also revised down May from 0.2 to 0.1. You know, this wage growth thing is just not getting going. There's no momentum to it, which is perhaps one of the reasons why the inflationary environment in the US is again kind of sliding south of 2%. So anything at 0.4, that would probably be the most influential. Just checking oil, which is just making a new low, or it's testing the low and it's testing yesterday's low. Just check oil. Anyway, just back to that average hourly earnings chart. If it's above 0.4, well, fine, that's interesting. That's the high, new 12-month high. 0.5, well then that's really interesting, and that's something the Fed might be interested in thinking about from a policy point of view. So this data is coming at 1:30. So we'll do a full preview. Here's oil on the break then. Oil just breaking lower right now, taking out yesterday's low, which was at 48.78. So nice solid breakout, 20 pips or so down to 48.60. So purely technical break here. Just check my headline feed where we're not getting anything oil related. Just want to check that is right. So no oil related news flow here, just technically adding to the slide that we had yesterday. It was a decent sell-off yesterday into the European close, down to test the low from the morning, and then we broke that into the close last night, and now we're breaking that low as I speak. But in the grand scheme of things, we're still right up at the top pretty much of this overall uptrend we've seen over the last couple of months. 48.37, that's the low of the week. That's the low of the month so far. Okay, 48.37 on the downside. So oil under a bit of pressure here. What's happening elsewhere? Well, not too much currency-wise. Euro dollar's just drifting sideways within yesterday's range. You got that high point from yesterday afternoon at 119.20, capping the upside so far. The high of the week, and indeed the 30-month high was set on Wednesday. That's at 119.40. Okay, so there are your levels to think about for euro dollar. So perhaps a touch of, well, the dollar's slightly weak today. Even the pound has managed to regain some of its losses from yesterday. So a touch of dollar weakness, maybe because of this Trump news, maybe. But obviously oil lower, which doesn't stack up with dollar weakness, but that's technical, perhaps a bit of profit taking off what's been a very strong rally. Gold's not too active here this morning. It's all quite flat. Gold did have that pop off the headline from the US at the Trump news last night, but we're within that. For gold, the high point that we've seen this week is set back on Wednesday up at 12.79. Okay. Equities are, well, the S&P is trying to push to test. Well, you can see we've been flat all month, all week, that is. So August obviously only starting on Tuesday, but we've been very flat and sideways, and so I wouldn't expect this to change before payrolls, and maybe not even after payrolls either. So just keep this tight. I mean, definitely a range-bound market for US equities. Right. That's your lot. That's the briefing done. I'll be doing a full non-farm payrolls preview around about 1 p.m. and keep things tight until then. All right. Enjoy the day. Thanks.